Hi everyone, this is Robert Eldridge with annuitycampus.com. Today I'm going to discuss a system or concept called the infinite banking system or concept. It was developed by Nelson Nash, and the basics of this is this. You become your own banker. And the way you do that is buying a whole life insurance policy. And what I mean by that is you overfund it. So what happens is this. You buy a whole life insurance policy. You fund it for 5 to 7 years, you overfund it, and then you have $20,000, $30,000 in cash value. You go out, you buy your car in cash, for example, and you pay yourself back the principal plus the interest that you would have paid to another bank or financial institution, and that goes back into your whole life contract, which does what? When you pay yourself back anytime, principal and interest, your cash value goes up, and you continue to borrow against it, pay yourself back, and the money goes through the roof. Then what happens when you're 67 years old or even your 50s? Well, you've built this cash value up, now what do you do with it? You take it out for tax-free retirement because it's your own money that you're taking out, okay? And that's how you build cash value. And traditionally, everybody's always talked about whole life insurance policies. But I'm not a big believer in them. There's nothing wrong with them, but the numbers are always the numbers. And what I mean by that is IUL, Index Universal Life Insurance Policies. If you're going to fund a vehicle, a life insurance policy, everything remains the same. Wouldn't you want to go with the insurance policy that's going to cost you less to get there? Well, of course you would. With Index Universal Life Insurance policies, the minimum guarantees every single year are 3 or 4%, and the upside potential on an index IUL is maybe 12 to 14% if the index goes up on the S&P. Now, with a whole life insurance policy, the nice thing about it is you get paid dividends. Everybody likes the sound of dividends because the policy pays you. But when you look over time, even if they're averaging 5 to 7% on dividends, and an Index Universal Life is giving you 3 floor every year with a potential to 12, over the long run, chances are you're going to do better in the Index Universal Life. Now, that might be up to debate. You might be an older agent that likes whole life and that's all you know. That's great. Whole life will work wonderful too. They're both permanent policies. All I'm saying to you is this. When you're looking at the infinite banking concept and you know when you're the timeline and when people are going to start taking out their money, how much do they want, just compare them. Just compare them. Use 3 or 4 different whole life companies, 3 or 4 different IULs, and whatever comes out better is the best one for you, the client that's watching this video. So if you have any questions or concerns to see if an infinite banking concept is right for you and what you're trying to accomplish, give my office a call. We'd love to give you a consultation, and we're not owned by an insurance company. We're not captive. We really don't care as long as it works out best for you, the client. Thanks again, and have a wonderful day. Bye-bye now.